All right. We are ready to go. So today I'd like to introduce our presenter, Michael Hunter from Aligned Education Foundation. We are so thankful to have you here today, sir. Aligned Education Foundation is a nonprofit 501c3 organization that educates veterans, service members, and realtors about the VA home loan benefit. We are the connectors for veterans with veteran service organizations that give back to the community by volunteering our time and supporting local veteran-owned businesses. So thank you, Mr. Hunter. The floor is yours.
All right. Well, first I want to say thank you, Lori-Ann, for inviting me today, and Dr. Bora and the staff there from the your foundation for the University of Texas. Today we're going to talk about the VA home loan. So let me go ahead and bring up this screen here. Excuse me. Share screen. All right. Here we go. So little backstory on Aligned. The foundation was created by Tony Diaz and Chris Cano. They had worked in the mortgage industry for several years. And they began to discover that veterans were being taken advantage of through either overlays that lenders were creating, making it difficult for veterans to qualify, or through additional fees that were being charged, also making it very difficult. So they got frustrated and they wanted to start a foundation to go out and educate veterans, service members, realtors, and really anybody that have their hands as part of the process. And through this, we're helping veterans all over the United States and globally. We have customers in South Korea, Italy, England, and Germany, and Alaska. So we're hitting all the 50 states. And so our goal is to help veterans achieve their dream of home ownership. So there we go. So we're going to talk about the truth of your VA home benefit and how it works for you. All right. Tony's goal is that every member who's ever served this country should be afforded the opportunity to own a piece of it. We're going to hit the 5 questions there. So a little history of the VA home loan. It was established in 1944 by Franklin Delano Roosevelt during World War II. And this was to ensure that soldiers returning back from war would have an opportunity to qualify and purchase a home. Everything that we teach is strictly out of the VA PAM 26-7. So just understand that it's just like a regulation. So any branch of service has, regulations they follow. This is the regulation that outlines how, who, what, and where the VA PAM or the VA loan can be used. And keep in mind that the VA only guarantees the loan. So they don't actually lend money. They're going to guarantee 25% to the lender. All right. And in 2019, the Blue Water Vietnam Veterans Act eliminated the cap on the VA home loan. Basically, this meant as long as you had the income and credit score to qualify, you could get a loan as large as you want. Now, there are county caps when it comes to bonus and second tier entitlement. We're going to discuss that later. But this would enable a veteran to get a larger loan, especially for areas that have higher markets with zero money down. All right. So what is full entitlement? Full entitlement is that you've never used your loan or you've paid off an existing loan and you restored the entire entitlement. Okay. And we're going to show that here in a couple of slides. So who is eligible for the VA home loan? Anyone in our 6 branches of service, to include the recent Space Force. All right, as long as they've served 90 days of wartime or 181 days during peacetime. All right, our National Guard and Reservists, as long as they have 6 years of accredited service and they've been separated under one of these 4 conditions here. Also, anyone discharged due to medical service-connected disability. So if you've been medically separated through IDES process, you're also eligible as long as you've been and we'll talk about the exemption here in a minute. Unremarried spouses, so Gold Star family members, and then our prisoner of war spouses. All right, when you finance your loan, you're going to fall into one of these 3 categories. All right, and most commonly we see is the one there in the middle. But keep in mind, a veteran and a veteran can qualify to finance a home. and they don't have to be married. Just two veterans can finance for the home. Now, a veteran and a non-married civilian can finance for a home. However, there are additional requirements there due to this. All right, we're going to talk about the certificate of eligibility, where you can find this. So through e-benefits, if you're registered with that website, you can go there, and in that middle column there, managed benefits, about halfway down, you'll see a tab that you click on, and then on the left-hand side, it's going to give you a tab for the certificate of eligibility. And when you pull that up, you're going to see a form here that's going to look just like this. All right, it's going to talk about the entitlement category that you belong to, whether you are required to pay the funding fee or not. So if you notice in the upper right-hand corner, you'll see non-exempt, meaning they are required to pay the VA funding fee. Any prior loans in the middle, so it's going to show any homes that you've previously owned, whether foreclosed, bankruptcy, or still own them. Those homes will be listed here on the certificate of eligibility. All right, and this it's going to show how much entitlement you have remaining and any conditions listed below that. So what can be financed? Usually one of the most important questions. Anything on this list here, keep in mind, if you buy a mobile home, it must be on land that you own. So it can't be part of like a mobile home park where you're paying lease on the land. It has to be land you privately own. Duplexes and fourplexes, very common nowadays. You just have to live in one of the units as your primary residence, and you can rent out the other three. And then for condos, you just want to check with the VA to make sure that they meet the minimum requirements there, based off of location, access, and stuff like that. All right. New builds and construction. This is a big one. So for new builds and construction, there's several things you want to keep in mind and you want to look out for. The first one is incentives and true cost. All right. Oftentimes a builder will ask you, if you use their preferred lender, they're going to offer you a $10,000 builder credit, but that usually comes at a cost of the lender increasing the interest rate, in which then they make back that $10,000 almost tenfold by servicing your loan over 30 years. So you want to be aware of this, that oftentimes that this can cause you to pay more money. Also, with your property taxes, you need to look at the property taxes in the county of where you're building. Because keep in mind, when you buy your land and you start construction, your land is only worth what the land is currently worth in its current state. But as you begin to build and finish and complete your home, at that point, your home is going to begin to appreciate in value. And over time, your property tax is going to begin to increase. And when you're planning a budget for your home payment, your mortgage payment, you want to make sure that you've properly planned. So check with other homes comparable in size to the one you're building, and compare what the property taxes are on that home, so that way you're aware of what your property taxes really will be in a few years. The status of your home, it cannot be a fixer-upper. Now, this is a gross example here that we show you of a home, but just keep in mind, the VA wants to protect your investment. They want to protect the buyer. They want to ensure that things like the roof or the, heating units or whatever inside the home are in good standing, because what they don't want is for you to get into this home and then end up with a $25,000, $30,000 cost of repairs within a few years. So why use the VA home loan? Well, for one, there's no money down required. There's no private mortgage insurance. And if you're not familiar with that, we're going to discuss that in a few more slides when we compare conventional versus the VA home loan. And another big one is dual military entitlement. And that's usually huge for a lot of our dual military families. So there's a lot of myths out there about the VA home loan. And unfortunately, 87% of veterans do not use the VA home loan because of these myths. Oftentimes it's found or heard from like barracks lawyers, other members who have not also used their loan or had misinformation, and they spread that through either social media or through their networks, discouraging other veterans to use their benefit. So one of the big ones is, I can only use my benefit for my first home. And that's absolutely not true. As long as you have paid off your loan and restored your benefit, you have full entitlement. However, if you choose to keep that home and use it as a rental property, or you foreclosed or filed bankruptcy and lost the previous home, keep in mind what I said, the VA only guarantees 25% of that loan. So that portion of your entitlement has been taken away, and you will basically have second-tier entitlement for the rest of your life unless you restore and pay off that debt. And that's applying towards foreclosures and bankruptcies. So even if you fall into one of those categories, you're still eligible to purchase a home. For everyone else, you can continue to use your benefit until you run out of benefit. All right. And even when you do use some of your benefit, the only difference is that you'll be required to pay a portion of, let's say your home is $300,000 and you only have $275,000 of benefit left. Well, then if you only have that much benefit left, then the $25,000, you'll be required to put 20% down on that portion of the loan. The rest, it will still be no money down. So we're going to talk about second-tier bonus entitlement. So most counties within the United States, the county cap limit for second-tier entitlement is $647,200, and this is up almost $100,000 from last year, where it was $548,250. All right. So remember, I said that they're going to guarantee 25% of that loan. So your entitlement charge there is $161,800. All right. Now, obviously, the VA recognizes that in certain parts of the country that the cost of living is higher. So they've increased those county caps for those high cost of living areas to assist veterans in qualifying for loans. Otherwise, they wouldn't be able to afford loans in these areas. Now, on your certificate of eligibility, it's going to show a previous home that you own. So here, the loan amount on that home was $316,280. The entitlement charge, that 25%, was $78,250. So you're going to subtract it from the overall entitlement, subtract that $78,250, and it's going to leave you with $83,550 times 4, which is $334,200. And that's where I was talking about if you have a second-tier entitlement, but your home's just a little bit more. If you were to buy a home over $334,200, you just owe 20 cents on the dollar for that remaining balance. Here's an example of a dual military family that, assuming that they had their full second-tier entitlement there of $647,200, purchasing homes individually as a PCS around the country. And at the end of their career, they decide to buy their forever home. So they combine their entitlement. When you kind of look at it this way, $647,200 times 2 is almost $1.3 million in entitlement. Keep in mind, you still need to qualify with income and credit score. Another big myth out there is that I don't have the credit to qualify for a VA home loan, and that's not true. So credit is not determined by the VA. Credit is determined by the lender. And this is oftentimes where a lot of vets get extremely discouraged, because they'll apply for a loan, the lender will deny the loan, but the lender will only tell them that your VA home loan was not approved. They don't tell them we didn't approve your loan. They just tell them it wasn't approved. And what this does is it makes the veteran very discouraged with the VA, blaming the VA for the fact their loan wasn't approved. In fact, it was not the VA's fault at all. So just keep that in mind. Now, there are, generally speaking, a range in which most lenders will fall for approval. And if you fall below that range, there are credit rebuilding programs out there that will assist in getting you on the right track so you can qualify for a VA home loan. Another myth is that there's always a funding fee no matter what. And this is significant. It's a one-time payment to the VA for the loan. And so in this, if a veteran has a qualified disability rating of 10% or greater and is receiving compensation for that rating, then they are exempt from paying the VA funding fee. Also, if you're a Purple Heart recipient, so going back to that Blue Water Vietnam Veterans Act 2019, as of January 1st, 2020, anybody on active duty that has a Purple Heart is exempt from paying the VA funding fee. All right. Also, you can get the funding fee refunded to you. So if you start your IDES or disability claim process prior to closing on a home loan and make it known at that time before you close on the home, once you close, you can go back and get your funding fee reimbursed. All right. And there's a process for that, that you have to go through your lender. If you have difficulty with the lender, you can contact the Veterans Refund Resource Center, and they will assist you with this process in getting your funding fee reimbursed. Keep in mind, if you rolled it into your loan like 97% of people do, the funding fee will be applied towards the principal balance. If you paid for it separately, then it'll be dispersed back to you personally. So the funding fee, talked about it earlier. The funding fee is a one-time payment to the VA. And this money goes towards funding other programs that the VA uses. But basically on your first loan, of course, you're required to put zero money down. So you're only going to pay 2.3% of the sales price for the VA funding fee. And every loan after that, regardless if you paid off your loan or not, is going to be 3.6%. Now, you can buy that percentage down. You can put 5 to 9% and get 1.65, or 10% or greater and get 1.4% for your funding fee. We do not recommend you pay over 10%. And the reason being is that you're not going to save any additional money there. And that money can be used for things, more importantly, to buy down debt, to invest, or if you have new build construction, there's things that don't come with a new build, like fences or blinds oftentimes that customers don't think about when they're purchasing a home. And these things can add up to several $1,000s, like a wooden fence these days can cost you upwards of $5,000 to have installed. So if you have additional money, keep that aside and use it for something else that you need it for. All right. Now on the VA IRRRL, which is one of the great programs that the VA has, probably one of the best out there. If you talk to any lender, the funding fee is only 0.5%. All right, that's for minimal closing costs. And we're going to go into that a little bit more for a little later. All right, the funding fee versus PMI. So on conventional loans, they have what was called private mortgage insurance. On your VA loan, you do not pay PMI. So here's just an example of a conventional loan in comparison to the VA. Most of the time, the VA's interest rate is going to be lower. There's going to be no money required down, but now you're going to notice that the total loan amount is higher on the VA side. And that's because of that funding fee is included. All right. However, when you look at your payment, and your payment's broken down into 4 buckets, it's principal, interest, taxes, and insurance. When you add PMI for conventional loans, you're not going to pay that on the VA side. And that's going to bring your overall monthly payment down. And you can see the savings there on the right-hand side. Streamline Refinance, VA IRRRL, a great program. So this program is designed to reduce your interest rate with minimal closing costs. And there's very strict guidelines on this. After 6 months, you're eligible for the program. And the reason why it says 210 days is because it still takes 30 days to close on this process. However, the requirements for our application and everything are extremely minimal, and closing costs are minimal. And the reason being is it's designed to where, let's say your balance of your loan was $300,000 and your closing cost is $500,000 or $5,000. The idea is that within a few years, you're going to recoup the cost of the closing costs on this loan, bringing your balance back to $300,000. So it's not meant to tack on additional funds. So when you do a cash out, you'll oftentimes see that fees are higher and stuff like that, and it adds additional closing costs. In this case, it reduces them and keeps them extremely low, reducing your mortgage payment. However, keep in mind, there are a lot of companies out there that do have veteran in their names. And you'll receive this mail and you'll know when you're eligible for it because your mailbox is going to start to fill up on Mondays and Wednesdays with all these letters, right? And they're going to claim to be veteran friendly and they're going to flash really attractive interest rates, 1 point something, low 2s. The issue there is they're going to charge you points to reduce that interest rate. And in doing so, you're going to pay $8,000 to $9,000 to buy that interest rate down. And that's a decision you're supposed to make, not somebody makes for you. So in this case, those fees are going to exceed the minimal closing cost requirements by the VA. And in doing so, when you get to closing, you're going to be required to put money down, and you shouldn't have to. So just keep in mind, these offers are mostly junk. We recommend you just throw them in the trash and find a veteran-friendly lender that will help you out and not charge those additional fees. All right, so how valuable is your BAH? This is one of the things I wish I would have learned when I first entered the service. In this example, we have a Navy corpsman of 25 years, finished his career at E8. And it just kind of shows the amount of money. But the real takeaway from this is that after 25 years, he's earned almost $750,000 in non-taxable income that can be used to buy real property. And you can claim your property taxes interest and get money back. It's a great investment if used wisely. Big decision out there is whether you're going to rent or own. And it's definitely one that's that you got to discuss, with your significant other. But keep in mind that anytime you're renting, you're paying somebody's mortgage payment. It's just not yours. And so in that case, they're making money off you. So if you're paying $1,800 a month in rent, the homeowner is probably only paying $1,200 in mortgage payment. They're making $600 in profit off of this. So again, and the fact that homes normally appreciate in value. Another rumor out there or myth is that home ownership is expensive. And what I'll say is, the VA is going to ensure that the home you buy is protected. They're going to look and make sure that it meets certain requirements, that's in good standing, but also you can get a homeowner's warranty for about $40 a month and homeowner's insurance. You're going to protect this investment just like you would anything else in your life. Because when it comes down to it, this is the largest investment you're ever going to make. Big oftentimes we'll hear this conversation is, I'm only going to be here a few years and I'm going to move around. Well, if social media was around when I first joined the military, I probably would have learned about military to millionaires and how they are buying property. And as they move throughout their careers, they're using these properties as rental properties. And they're continuing to be extremely successful. There's tons of them out there. But I always say that this is a family decision that you have to make. Not everybody's financial situation is the same or credit history is the same. So this is something that you have to talk about with your significant other and make sure it's the right time and that you can afford to do so. But it is an extremely profitable business. Another big reason people don't buy is fear of the unknown. And I find this usually with younger couples because when you're purchasing a home for hundreds of thousands of dollars and seeing all these fees and everything else that goes into it, it can be extremely overwhelming. But the more educated you become, the more comfortable you will be with the process. If you look at on post and rent versus a 30-year mortgage, we've already discussed the rent part of it, but let's talk about on post. What do we see in the news in the last couple of years? The condition of on post housing through privatized agencies and how they treated the on post housing. And it's really unfortunate. After $65 million lawsuit, they still have the contract. So what I recommend is get with a realtor, do some rental market analysis, look at where you're going to live, and find out if this is the right decision for you. So next, we're going to talk about the steps of a VA closing. Right? And this is extremely important. One of the first ones we talk about is finding a loan officer you trust and has a great, tremendous amount of knowledge regarding the VA home loan. And in this, you want to find a veteran-friendly lender, someone that deals with VA home loans all the time. Okay. And usually what I say is talk to somebody, talk to friends, talk to family, talk to coworkers. Somebody has had a great experience, which they can help give you a referral. And that's where you want to start. Get pre-approved. That is absolutely the first step, because when you have a pre-approval, you're telling the seller that you're already backed by a financial institution, plus the market you should be shopping in. Why look at $1 million homes if you can't afford $1 million home? This narrows your focus and helps you look for homes that are within your means. All right. And this is what we like to call day zero of the process. These are just some of the documents that the lender is going to ask for. It varies from lender to lender, and it also varies based off of your credit score history and your financial situation. Now, if you're doing a new build construction, as time goes on, they will ask for additional requirements. All right, no need to write this down. Like I said, every lender will send that out to you. It's called a needs list. The lender is going to run your credit report, and they're going to come back with an approval. All right, when they do this, this is your time to kind of shop around. All right, you're going to find a realtor. Again, friends or family. Oftentimes, what folks do is they get online, they look at Zillow, they see a home they like, they contact the realtor, and that realtor ends up representing them. But keep in mind, you want to have somebody you trust. So talk to your family, talk to friends, coworkers, find a realtor that you can trust, that will have interests at heart. All right, and then once you find a home, make your offer. All right. Once they accept the offer, this is day one. And this is where you now have time to shop around and get competing offers from different lenders. So what we recommend is once you have that disclosure from one, find another veteran-friendly lender and take it to them and have them give you a counteroffer. And you can continue to do this all the way through final approval and then select the best offer for you and your family. All right, the application is sent to processing and they order the appraisal. All right, this is extremely important. This is called day 2, when the appraisal is ordered, and you want to keep that in mind. Let's go further into this discussion, because this day is extremely important. This is when we ensure that appraisal was ordered to get it back in a timely manner to ensure no delays in the process. All right, when the appraisal is complete, you're going to issue a notice of value. So what is the notice of value? This is where another big myth comes in. The notice of value is the appraisal of the home and the property in its current state. This is what the true value of the property is. Now, that doesn't mean that's what the seller is asking, but that is what it's actually worth. And in today's markets in a lot of areas, you'll see homes selling for 2 to 3 times what they're worth. Okay. What you'll often hear, though, is people will complain, sellers get frustrated and say, well, we don't want to deal with VA loans because they come in undervalued. And that is absolutely a myth. They don't come in undervalued, they come in at value. And if the realtor knows that the home is going to appraise at value, and that value is less than the current market conditions, there is a process that they can take proactively before the notice of value is issued to help with getting approved. And this is called the Tidewater Initiative. This is done at least 48 hours before the notice of value is issued, and where the lender or the realtor will compare homes within the area and try to find other comparables to increase the value of that home and try to close that gap between the seller's asking price and the current market or the current appraisal. Okay. Now, once the appraisal is issued, if the Tidewater Initiative did not increase that in the value enough, then you, as the buyer or the real estate agent or the lender, can request a reconsideration of value. This takes about 4 days. And again, you're going to look at other comparables, other homes that weren't used in any step up to this point. You're going to look for errors. And then as the buyer, you can write a letter to the VA explaining that, hey, look, I understand that the home only appraised for $275,000, but the seller wants $300,000. In this, you can tell them that, this is your forever home, that you love this home, and at the end of the day, you can afford the home, and you qualify with credit score and income. We have seen that in this case, oftentimes the VA has about a 50%, historically 50% approval rate of the reconsideration of value. If for whatever reason it does not, you're left with basically 3 choices. One, you can ask the seller to lower the price. You can bring cash to close to make up the difference, or you can walk away in what's called the escape clause. Now, this is another reason why sellers are a little hesitant with the VA home loan process, because the VA has protected you as the buyer in this process. They're going to ensure that at any time, if you need to walk away from the deal because the deal is not favorable to you, you are not penalized. And so they put this clause in there. And for sellers, it's frustrating because you have the option to do so. And then they have to start the process over with their home again. Now, if the notice of value comes back and everything's golden, then at that time, everything's going to be sent to underwriting by day 15, which is going to keep your interest rate locked in, and final approval will be issued. Again, as you're going through this 15-day process, you're shopping around, you're going back and forth between lenders, taking those offers and getting counter offers and continuing to do so. Now, keep in mind, loan officers are great people, all right? They're really nice, but they're in a business that requires them to have great people skills. Their job is for you to get you to like them and do business with them, and for them to make money. Your job is to get the best deal for you and your family, because nobody in this process is going to have your interests more at heart than you. So I strongly encourage you to shop around with lenders, make them compete for your business. And at the end of the day, pick the deal that's best for you. All right, once that's done, then closing will be scheduled. And based off of state, they all have their different requirements, but you'll either go to a titling office or they'll come to you and you'll sign your documentation. Funds will be transferred when told to do so. And then you will be issued with a key and be standing there smiling with a big cardboard key of your home. All right. This whole process should take about 30 days. All right. And this is extremely important. That's why we talked about day 2 of ordering that the appraisal, because it takes 10 days to get that appraisal back. And then if you need to do the Tidewater, or if you need to do the reconsideration of value, that you have all that done before day 15 when it's supposed to be at underwriting. to ensure that your interest rate does not get suspended and they have to lock in a new rate. Oftentimes you'll hear from a lender, we're not going to close on time. We have to shift your closing date to a new date. And that's because they had to start the 30-day process over. It's all behind the scenes that you don't see. It's not transparent. So you're not aware of it. But that is why they shift your closing date. All right. It's supposed to be done in 30 days and it can be done in 30 days. And if it's done in 30 days, the seller is going to be pleased with the process and it's not going to frustrate them. All right. And you as the buyer, of course, because you haven't wasted your time. So find a lender that is going to aggressively get after this and get this done in 30 days. All right. We're almost to the end here. Closing cost. What you'll see here is title and escrow. Remember, we talked about, and then your prepaids on the right-hand side. So we talked about the 4 buckets that your mortgage payment falls into. You have your actual mortgage. You have your principal, interest, taxes, and insurance. So homeowners insurance, property taxes are paid for at the beginning of the purchase for the upcoming year. And they're usually rolled like 97% of the time into the loan. And so in most cases, what you'll do is let's say your property taxes and insurance are $3,000. They're going to pay for this upfront. It's called prepaid, part of your closing costs. And then as your mortgage payment gets paid every single month, out of those 4 buckets, that taxes and insurance amount is going to go into an escrow account. And it's going to stay there to the end of the year. So when your insurance and taxes are due again, then the lender's going to reach back into that account and they're going to pay your county taxes and your homeowner's insurance to those agencies for you. And this prevents you from having to come out of pocket $3,000 next year. Now, if for whatever reason, remember I talked about new builds and how your home will appreciate in value. If for whatever reason it does, and the escrow account is short, then you're going to receive a letter that's going to tell you pay the lump sum, or your mortgage payment will go up a couple dollars every month to make up that difference. So just keep that in mind. Now, for folks that are exempt from paying property taxes, you want to check with your VA. You do have the option not to escrow, and that's a decision you have to make yourself. But just keep in mind that that they'll adjust that for you. So you want to talk to your local VA representatives, county office, to make sure that you get those proper documentation set into your account, so that way you're not being charged your taxes. And that varies state to state. Some states waive based off of disability ratings. Some states give you like a pro rate, like they'll take $45,000 off of your property taxes. All right, we save these slides to the end for a reason. So typical lender closing costs here, we're going to show you loan discount points. Remember, I talked a little bit about the VA EARL program. So loan discount points, that's a decision that you make, that you want to buy down your interest rate, okay, for a better interest rate if the interest rates are a little bit high at the time. That should not be included. So if you get a lender that tells you like, hey, I got you a great interest rate, and then you look and you see they charge you $6,000 for that interest rate, that's a red flag. All right. Appraisal fees, they vary, but generally speaking, I believe they're about $850 nowadays. They were cheaper in the previous years. However, due to the appraiser, and the appraiser is the same person regardless of whether they're doing conventional or VA, they just use a different form. But they were chasing the conventional appraisals because they were paying $900. And so the VA appraisals kept taking the back burner. And that was making the VA appraisals take like 45 days. Again, frustrating a seller because it's supposed to be closed in 30 days. But just keep in mind, you're going to see that fee, right? And that's something you can shop around for. And then the funding fee to the VA, if you're not exempt, you're going to pay that. And you'll see that listed. And this will be on your first page of the closing disclosures. And then you're seeing loan origination. So the VA PM 26-7 is very strict on this. The loan origination cannot exceed 1% of the sales price. And if it's listed as loan origination, it cannot be itemized fees right below that. And if they itemize it, it still cannot exceed 1% of the sales price. And this is oftentimes where we see a lot of different issues. And then you'll also notice a lot of other fees down there. $800 for an admin fee, almost $1,000 for $25 to $1,000 for an application fee. All right. But here's the catch. Remember, I said that lenders make money 2 different ways on servicing a loan, right? They make money up front by charging you fees, and they make money on the backside by selling your loan to another lender or by servicing your loan over 30 years where they make hundreds of thousands of dollars in interest, there is no need to charge these fees. These are what we call junk fees, and we strenuously advise you not to pay these fees. So one of the things that we do at Aligned Education as a military liaison, I work with my clients and I review their closing disclosures and look for these fees. And if I see these fees, I'll send them to a professional to review, and I send back the verbiage for you to negotiate with your lender. And usually you're going to get one of three things will happen. You'll discuss it with the lender and say, hey, I don't want to pay these fees. There are other lenders out there that don't charge these fees, and they're going to remove them for you. And that's a win. You should absolutely continue to do business. Sometimes you'll see these fees are removed, but you'll see them raise the interest rate. That's a red flag, and you should definitely walk away. And if they tell you they're not going to remove the fees, then walk away. The other one you want to be aware of too with builder incentives oftentimes is as you negotiate certain incentives with them and not paying fees, if they raise the interest rate on you at any point, that is also a red flag. These are things you want to be aware of. And this is one of the things that really, up Tony and Chris when they started this, because they observed lenders out there charging these fees. And we fly for the end, because if we showed it to you up front, you would be digging through your previous loans looking to see if you got overcharged. I got overcharged, and I've bought 3 homes to the VA home through the VA process because I just didn't know, and so the more we can educate people, service members and veterans on this process, and realtors and lenders, the smoother it'll be and the better it'll be for all our service members out there. The biggest response we always get is, I wish I would have known. So I'm going to turn this back over to the chat box and to you, Lorianne. If anybody has any questions, I'm going to drop my survey in the chat box as well. Feedback is extremely important to me. I'm very humble. So if there's anything that we could answer better for you, if we go too far in the weeds of something, or if you want more information, please let us know. And this also helps, for me accounting for how many folks attended the briefing today. And if you want any more assistance, then let me know as well. And if not, no worries. But thank you.
I actually had a question. I'm very unfamiliar with the home buying process. Let's start there. But I was curious, the kind of like this, all the steps you laid out from day 0 to day 30, et cetera. Does that change at all for a new build, knowing that I know nothing about a new build and what that process looks like, even if you're not using a VA home loan?
So your question is, does the process change from day 0 to day 30?
Yeah, is there a different, does it, yeah.
It does a little bit, because your loan isn't really going to get finalized until that last, as they get through different phases of construction, that is when they're going to schedule a closing. And that's when they're going to run your credit score that last time. They're going to run initially up front, make sure you qualify to start the process. You're going to put some earnest money down to secure a deposit. But then as time goes on, 8 to 9 months till the home is finished, at the end, they're going to run your credit and they're going to start that 30-day process.
Okay.
One thing I forgot to mention with new build construction as well, and thank you. If you want to build on your own land, keep in mind you have to buy the land yourself separately from the home building process to start. And that's because the VA does not back land purchases. They do not fund VA home loans for land. The reason being is buying land is an extremely risky business for anyone, especially for an institution, because if you don't develop that land, it can take years for them to sell it and recoup their money. So you have to usually put 20-30% down to purchase your land. And then as the home gets built, they will bundle the land. You'll basically refinance it to where the land and the home are put in one VA home loan, and then they just finish the VA home loan. So I hope that clears that up. And it's not meant to discourage anyone from home building. It's a great experience. But just, you need to know these things going into it so you can make wise decisions.
I had a couple questions. On the certificate of eligibility, it shows your previous loans. Is that only VA loans, or if you own a conventional loan, does that show up there as well?
No, so great question. No, so it's going to be VA loans only because that is through the VA. So they're not going to see conventional loans or anything like that. It's just going to show entitlement and VA, how much entitlement you used.
And this might be more of a stump question, but I thought it was interesting your comment on having to own the land. I mean, if you are a veteran or stationed in Hawaii, you can't own the land unless you are a native Hawaiian. So are you telling me that there are no VA home loans in Hawaii? Looking at your background there.
No, but I would definitely have to talk to a Hawaii realtor for how that process is done. I am not familiar. I know that there are VA home loans obviously in Hawaii, but how that is done, I don't know.
Okay.
I was not aware of that either, that you can't buy in the land unless you're native. So
certain percent native. Dr. Bora, you guys were stationed there too. I think it's like 33%.
There are, somehow they've worked this out. It doesn't prevent you. I didn't use the VA home loan when we were out there, but it didn't, I know it wasn't off the table. So they work around the Hawaii real estate laws, wherein you can't own the land technically, but they address it through the process.
Okay.
Yeah. Nice try, Lorianne, with a trick question.
It's a good one. I appreciate it because maybe it'll come up again. I know some folks that want to retire in Hawaii, so I'm sure it will come up.
Yeah. It's just something I found really curious when we were out there. And I guess my final question is, one of the myths I've heard definitely is about the lack of VA home appraisers that are actually out there doing it, and the timeline. And that's one of the things that really slows down the process of the VA home loan, and why maybe veterans don't go with the VA home loan because they're scared of that appraisal, their house not getting appraised or approved. Can you speak on that a little bit?
Yeah, I can. So, a lot of times lenders want to wait till they get that needs list back. And the fact is they don't need all that documentation to order your appraisal. Once you've applied, like I said, that starts day one. On day two, they should order your appraisal because it's going to take 10 days to get it back in a perfect world conditions. Now, COVID slowed some things down. Now, as far as there being VA appraisals, I'm not familiar with the process of what it takes an appraiser to, if there's some certification or something they need to do the VA ones. I know there's a checklist they're going to follow for that, but it's, oftentimes it literally is the same appraiser. But what was slowing things down in the past was that cost difference. They were getting paid like $500 more to do conventional appraisals. So why am I going to do a VA appraisal when we were in a bind, financially for a few years, and I can make more money doing these. And so VA appraisals just kept getting put to the back burner, the bottom of the pile. And it was taking 45 days to get these things back. Well, that, frustrates the closing process as far as the 30 days goes. And so sellers get frustrated, buyers get frustrated, and it just, so they had to figure out a way. So what they ended up doing actually was they increased the appraisal price to make it competitive with the conventional price. And initially at a look, I was like, oh, that stinks. Why did they raise the price on us, But what it ensured was that competitiveness between those two appraisals to ensure that they were getting done. They also enacted a law last year that put veterans in a protected status during the home buyers process. And that helps facilitate the appraisals as well. But what it really comes down to, and again, this is not something that you as the buyer should have to worry about, but knowing this, you can be that little annoying gnat or whatever flying around and constantly ask, hey, has my appraisal been ordered? Has my appraisal been ordered? Has my appraisal been ordered? To ensure that they're getting it done. So that way you get it back in time and you can take all the necessary steps you need to, so they don't suspend your rate and have to lock in a new rate and start a new 30-day process again. And you can close on time, because a successful closing in 30 days makes a great experience between the buyer and the seller. And it helps spread the word that, hey, look, this can be done. You just got to find the right people, the right lenders that are willing to bust their butt and get it done. And they're out there. It's just finding them and making sure that people are doing their job.
Okay. Anybody else have a question?
I have a question. So I just got a home loan about a year and a half ago, VA home loan. And we bought 10 acres and there's 3 acres behind us that are available. Is it possible to add that land to our current 10 acres to our loan?
That is a very good question. I am going to have to get back to you on that one. I've never been asked that. I will look up and see, Ashley. Do me a favor, if you don't mind. If you wouldn't mind filling out that survey, put your question on that survey. I will shoot it back to my headquarters and we will look that up and we will get that back to you within a day or 2 at most.
Awesome, thanks.
And if it's possible, we'll find out how to do it and give you this.
Yeah, the 3 acres are unusable land. So the only way to access it would be if someone built an easement through our property. And so this is why it came about, because it's available.
Yeah.
We had a realtor come and ask if they could build an easement through our 5 acres. No, not happening. So to ensure that this doesn't happen again, we'd rather buy the 3 acres because it's unusable to anyone else but us.
Okay. I will get that answer to you.
Awesome. Thank you.
Hey, Michael, I'm looking, I don't know if everybody else can see this in the chat with your link to your survey. I just see a white box. Can other people access it?
Yeah, I see it.
Yes, I was able to access it.
Is it all there? Okay.
Okay,
Just
well-
want to make sure.
Well, I'm special then because I can't access it. Maybe you send that to me sidebar afterwards. Wait, now there it is. Okay.
All right. Thank you.
Thank
Clint.
you, Clinton. That's good. We got it. Well, we are wrapping up here. Do we one last call for questions? Anybody else? Well, Michael, thank you so much for coming on and presenting today and giving a good overview of the VA home loan process. I mean, I found it educational, and I am among that 80-something% of veterans who has never used this benefit. But it looks like we will be soon as we move forward with our house construction, and it's very exciting. And I am really excited about all of our future programs with the Veteran Transition Program. And like I said, we have the T2 chat coming up on Thursday at 7 p.m. So you can go on to Eventbrite and follow us, and you can sign up for it there. And then we'll have another Up and Out seminar next month, a little bit more focused on the Texas housing market. And one exciting initiative that I wanted to maybe turn it over to Dr. Bora to speak on is our UTOM, which is the University of Texas Oscar Mike initiative. So Dr. Bora, do you mind speaking on that?
Yeah, sure. And if you don't mind sharing the link to the website, that would be great, just for reference.
Yes.
But yes, this is a brand new initiative that we're doing with the ETS sponsorship program and Soldier for Life. It's part of a pilot across 7 military installations where we're trying to be available and supportive to transitioning service members and their spouses as they leave military service and move on in their education and their careers. And so the initiative partners our institute, the Military Institute for Military and Veteran Family Wellness at UT Austin, with our Office of Continuing Education that provides credentialing programs at the University of Texas. And so this is really great. We have 3 different certificate programs that we are recruiting service members and spouses to join. They will kick off in June. And Lorianne will share the website so that you can go access those options. And, you know, there is military related funding that supports the service member attending these programs, getting certificates. And by the way, these certificates are in high demand among our industry partners in the Central Texas region. And so our goal here is to get people the credentialing and skills they need to transition straight into a great job in the Central Texas area, including the tech industry that we know is booming here. And so take a look at that website. And then what I was going to add is we're looking for opportunities to fund spouses certificate tuition, which is about $4,000, whether you're service member or spouse. But we'll be adding resources for funding of spouses certificate programs to that website over time. So please take a look. And as Lorianne mentioned, we've got lots of programming coming up to support transitioning service members and their spouses. And we're excited to serve them. And we're always open to feedback and suggestions. So please reach out to us and register for events. We'd be happy to see you. And I wanted to add a thank you to Michael and Clinton. You are our first seminar series. We really appreciate you doing this with us. We'd like to share the recording out to everyone else so they can get this great information. And maybe we'll have you back another 6 or 12 months when we have a larger following. We're just kicking off this initiative literally today. So thank you so much for being the first.
Well, Dr. Bora, thank you for having us. It was absolutely my pleasure. And thank you for everything that you're doing for our veteran community within your area as well.
Definitely. You're welcome.
All right. Thank you guys so much for coming out, and stay tuned for more. And I guess without further ado, I will call this Up and Out seminar number 1 closed.
Great. Thank you, everyone.
Thank you. Thanks for coming.